Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where each morning we take a quick half hour to review market open in Asia and reflect on the direction of travel through the day. Let's kick off deep in Asia, I think. Sydney is Asia, right? Even though they sell fish and chips, it's still Asia. Peter McGuire, CEO of XM Australia. Peter, welcome. It seems the markets have taken off again, the equity side at least.
Absolutely. And good morning, Sean. Good morning, other panelists. Yes, greetings from Sydney. Yeah, Aussie's up 1.5%, Sean, though New Zealand was off 0.4%. So how do you work that one out? But yes, across the general theme across Asia today has been one of green lights, and Taiwan really shot the lights out with about 2.25%. So that momentum build, let's see where actually, the rest of the day plays out as far as Europe, what happens in New York this evening. Commodities were also bid up. We've got gold back at that 1860 number, but crude very, very strong, 57 for Brent and about 54 odd for WTI. So they've had a nice lift, Sean, also for a Monday.
What's the view from Asia, Peter, on the shenanigans we've seen on the U.S. equity markets with the sort of day traders fighting the hedge funds or whatever it's going on exactly?
Yeah, I mean that's an interesting to put it mildly. I'm sure Mike would be able to lend far more expertise. One, that he's in the States, and secondly from Bloomberg. But the first part is they seem to be, the retail traders are banding together through technology and the old story, social media binding people together. The storyline was the shorts were going to get squeezed, so they looked at GameStop, and that was, the rest has been history. It's been ramped up.
Where is the vulnerability in the sort of structure of the market that allows this to happen from the point of view of your interpretation?
My understanding is that they're targeting companies. I don't know whether GameStop was that was the first one, and the name was there was something more to the meaning of the name, Sean. I don't know on that one. I haven't heard that sprouted, but possibly there's something in that.
It's hard to know.
They were naked. Sorry, they were naked shorts, and there was short positions as far as short sellers, hedge funds off it. So naturally, they saw that as an opportunity to band together, drive the price up, a short squeeze, as we all understand, and option strategies. And by the sounds of it, it's still got a couple of months to play out yet. So let's just see where it all rolls.
Just in case the market needed another drama to fill its time with, we've got one. And let's split the difference between Sydney and New York, and first go to Amena Bakr here in Dubai, Deputy Bureau Chief of Energy Intelligence. Amena, welcome back to the table. We haven't had a chance to catch up with you in a while. The outlook first month of the year, OPEC didn't even increase the amount of supply that they were allowed to. What's your read on that, and where's the direction of travel, do you think, for OPEC?
Good morning, Sean. Good morning, everyone, and Happy New Year belatedly. I think basically, Sean, that the Saudis are taking a very precautionary approach to the market. There's so many uncertainties and so many things that are clouding the view on demand. Given that the virus is still spreading, we're seeing lockdowns happen. You saw even here in Dubai, they've reintroduced precautionary measures again, and a kind of partial lockdown on many things. So given all of these uncertainties, Saudi Arabia is kind of taking the lead here, taking a precautionary approach, and that's why they didn't add the volumes, the 500,000 barrels that they were supposed to. In addition to that, this month, and yesterday to be specific, Saudi Arabia started to decrease its output by 1 million barrels, which will happen throughout February and March. This week, Sean, we have the JTC and the JMMC meeting, and they'll be reviewing all the numbers in terms of compliance, etc., and also the compensation cuts. So we'll be hearing the latest update by the end of Wednesday on that.
We saw increasingly the China oil demand could be dropping as forecast at the moment by about 400,000 barrels a day, given the COVID restrictions on travel during the Lunar New Year. Do you think this is something that OPEC will be taking into account? Obviously, Saudi had forecast a weaker demand for Q1 than maybe others.
Yeah, absolutely, yes. And other also issues that are on OPEC's mind are the possibility of an increase of production from some of the players. We have a new administration in the US, the Biden administration. And again, there's a lot of talk about the easing of sanctions from Iran and those extra barrels coming in. So these are all things, in addition to the pandemic's effects, that are being put into account. And therefore, that's why we're probably not going to see the increase of 500,000 barrels as previously discussed last year.
Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence. Mike, good morning to Connecticut, New York. Your thoughts, the market outlook as it stands at the moment. Oil prices have traded up yesterday, quite a decent bounce, and again today, starting the markets in Asia, testing to get back to that 57 high that we saw a few weeks ago.
Well, good morning and good afternoon.
Good morning.
I view oil, crude oil, as Amena pointed out. There's discipline of cuts from Saudi Arabia and OPEC, and I view your headline as the key point that matters. Is you have to sustain these cuts. We have to sustain a higher stock market. We have to keep demand picking up for oil prices to sustain these levels. So I view prices as very vulnerable, more likely to decline, particularly with copper peaking around $8,000 a ton. And the key point, I think, is there's just too much. I think your headline's key, and also there's a Bloomberg headline key. There's demand optimism. There's just too much optimism. So I look at OPEC's spare capacity. It's the highest ever versus production. It's the highest ever, around 10%. So that optimism and that discipline is just, I think it's unlikely and more likely to see mean reversion. Again, if the stock market declines, I should expect crude oil, WTI and Brent to drop at double the velocity. So there's too much dependence, I think, to sustain these prices, and more likely mean reversion in a normalization environment for crude.
Mike, is there any contagion for us to be watching on this sort of standoff we're just speaking with Peter about, in terms of the day traders versus the hedge funds? Is this a sideshow? Is it something that could disrupt the markets in a more profound way?
For the professional traders, it's a complete sideshow. I look at silver was all over the tape yesterday. I don't know how many times I was asked to comment about it. Silver is a massive market. And I checked into the futures market, and it's really hedge funds battling hedge funds, because one good fact is I looked at futures market. There was a massive pickup in open interest on Thursday, the day before the news really hit the tape. So this is hedge funds trying to anticipate what they're going to get from Reddit and Robinhood and fighting other hedge funds. So the difference with silver was the attack lately. It's a fundamentally bullish market. Hedge funds are net very long already, and they're just saying, thank you. Thank you, all you Reddit traders who are buying calls, because typically what happens with call traders, is my experience is, you buy the calls, they expire worthless, and then the market goes up. So, they might be able to move something like GameStop, which is a fundamentally bearish stock that was way shorted. And is the lesson I learned in the trading pits is, market's always going to go for the pain. It caught a little pain, it got lucky, but commodity markets are so big and so hedged and so deep. It's they might have a little fun like they did with silver, but it's not anything to do with fundamentals. And we all know if you artificially boost the price, what does that do to supply, particularly in ags? But it's just a lot of fun. It makes good headlines, but I'm fundamentally bullish silver. It's just, well, thanks guys. Thanks for helping me boost the price a little bit.
Peter, there forecast that China oil demand in Q1 could be less than Q4. It'll be the first quarter-on-quarter decline of Chinese oil demand since the COVID pandemic started. I would think, including myself, trying to read the tea leaves on the scale of China's disruption by this COVID resurgence, it seems somewhat minor, but yet the reaction can be quite profound, as in other places, lockdowns over small numbers of infections. What does it look like from your perspective? How significant is this adjustment to China's oil demand in Q1 into Q2?
Well, we've taken on board also, Sean, that, Lunar New Year. So you roll that in there and it's enough of the headline. Also building on that, of course, is the corona numbers. So Saudi's impact from a supply side, there's possibly, weakness there. We've just got to get through February to get a true indication as far as the severity of COVID and what impact it's going to have to domestic travel internally in China over that 2-week period. So
while they're saying 40% of travel is down on 2019, that's still a few hundred million people that are traveling. Yes. I suppose the potential for COVID infections to travel with them is what we're seeing all over the world.
Well, that's exactly right. And that's the issue that I think has got to play out into the March and April side. So, reinfection rates and, vaccines. It's just, hold on and hang on. I'm not sure what impact it has as far as price. Took on board Mike's comments. Maybe we're getting to a point that it's toppy 60. This time, I think in December and certainly early part of January with you, Sean, we were saying, what's that headline number going to be? Is 60 going to be the break point? So we're a little bit shy of it at the moment, but it's going to take a big push to get above it. And I'm not sure whether this environment's going to be the recipe to get us there.
Amena, I'm not quite sure where the markets would be if Saudi Arabia hadn't unilaterally cut 1 million barrels, or in the process of doing so, as you pointed out, through February. I'm wondering, what do you think drove them to do that? And then hence, is it something that they will continue with? The next sort of policy decision-making meeting is a month from now. What do you think Saudi's outlook is on this sort of unilateral action rather than collective action?
It's a very good question, Sean, and one that all the market and the industries everyone is asking. Will Saudi Arabia continue with the voluntary cuts beyond the 2 months? Now, first of all, why Saudi Arabia took this action? As I said, it was a precautionary measure. They said they wanted to speed up the market recovery. They wanted to draw stocks at a faster pace. If this is going to continue or not is still, it really depends on where they see demand, but also where they see the price. Aramco, for example, is really hoping to see $60 this year to sustain its projects and also build capacity. They have a plan to build capacity up to 13 million barrels, and this will need a higher price. It's too early to say if they're going to continue with these voluntary cuts.
Is there a certain sense that in the sort of dynamic of the Russia-Saudi piece, that Saudi did go into this agreement a year ago, April last year, cutting from a higher level, that they had increased production through March from the sort of top level, and so the 1 million down is really a rebalancing of where that was then, and so it's not really them giving up a lot of ground. What do you think the chatter is around that?
No, I don't think that's the point. In terms of baseline, Saudi and Russia had the same baseline, and that was kind of the agreement from the beginning. But perhaps that Saudi Arabia has maintenance scheduled during Q1, some of its big fields. So that really helps. These fields were going to be shut down anyway. So that really helps them achieve that 1 million barrels. But one other thing to note, Sean, that there are a number of countries that have been overproducing. And that's why we have the compensation plan. And that number, according to the last JMMC report, collectively is around 2.46 million barrels. So with Saudi Arabia's extra cut, it will help kind of balance that out. The cut that was supposed to happen there, in a way, the minister didn't want to put it that way, but they are cutting on their behalf.
And is that, there was, as we remember last year, through this journey of the OPEC Plus supply agreement, a lot of firm words around compensatory cuts that weren't made and had to be caught up with. Is there still that same kind of demand, if you want, from Riyadh that the laggards participate, they reimburse? I mean, there had been some pretty strong language. I don't hear it as much recently. I'm wondering your own sense on that.
Well, Prince Abdulaziz said during the last press conference that he admitted that they wanted this compensation plan to work better than it actually did. So in terms of language, yeah, we're not seeing the kind of push that we were seeing last year, but it's still there. And there is just, I mean, we're seeing like just the general statements of OPEC urging these countries to submit their plans. But I can tell you that countries like Congo, Brunei, Kazakhstan, Sudan, South Sudan, all of these countries didn't submit their compensation plan to the OPEC Plus group as according to the last report. So we need to kind of get an update where things are by the end of the week.
Okay. Mike, one of the other underpinnings, of course, on the demand side is the infamous $1.9 trillion stimulus. What is the outlook for that, do you think, and the dynamic, what we're seeing in the early days of the Biden administration? Is he going to be able to work with the Senate, with the Republicans? What's your own sense of the whole play there?
Yeah, I think he's going to get it. But that's and it's another kind of, I would say, tree in the forest. It's a complete dependency on the stimulus. The fact that it wasn't 3 trillion initially, it's 1.9 trillion, and then we're going to have the next level. Is that complete dependency is why I just cannot get bullish a market that's oversupplied. And to me, that's the bottom line. And one thing that's really I like to add to is I've been, I always try to focus on what I got wrong. I'm really shocked by the mentality and the human nature of what's happened in the last 6 months. I work in a company of 20,000 people, and I'm shocked how people just don't want to come back to the office. Oh, it's so much easier working from home. That paradigm shift, I think, is going to reduce this all these demand expectations, certainly in this country, and I think it's global. And then we have this decarbonization trend, which is accelerating. So I add to that, I just don't see the upside for crude oil, but I can see it for metals. I just don't see it in petroleum, fossil fuels that are being replaced by technology, which gives me demand for things like copper.
There's one thing you would note perhaps on this stimulus deal that's currently being hammered out is it does feel like there's an exhaustion. This, if it gets through, could be the last one. It seems even some Democrats, even within the administration, seem to be saying enough is enough. What's your own sense on that?
I love that narrative, but when you give politicians free money, what are they going to do? It's very simple. Yes, that discipline is great, but they're getting free money. As long as bond yields are not going up and the dollar's not collapsing, to me, politicians will do what politicians do and spend.
I suppose it depends if it's within the politicking, if it's perceived to be giving Biden a win, then the Republicans may be less accommodating. And I suppose that's where the bigger narrative is. Can Biden and the Republican senators work together to pass legislation as a whole? Are the early indications good on that or not?
Yeah, well, that's one thing about Biden. He's probably the perfect person to for consolation, for really bringing people together. I think he's the right person for that. But that's part of the reason in the macro, I can't get too bullish energy, but I can very much get bullish precious metals, because debt to GDP, MMT, QE, those are things I just expect to continue to trend from the lower left to the upper right. And, Democrats have control.
Peter, the other aspect to this, if you like, one of the other pillars, I don't know, it's sometimes a big pillar, sometimes a smaller one, is the weaker dollar. We've seen the dollar have some recovery in recent trading days. Your thoughts on the outlook for the dollar strength and its consequence or bearing on Asian energy demand?
Well, Sean, we're at 91 on that US dollar index. So it's bounced very strongly for over the last 2 weeks from that 89.2 handle. Now, possibly a 91.5. It's a hard one to really put a lot of faith in, but I think from the first part, what's happening as far as Eurozone. So I'm looking at that closely this week. The next part, of course, is the overall fabric of Europe, Corona. So maybe
on that point of the currencies, do you think the other decision that's coming this week, I believe, is will the British central bank move into negative interest rate territory?
Well, I think that's, again, we had our meeting today and we've got the UK meeting. We've only got two central banks meeting this week. Aussie was the first one off the blocks. We've got the UK. I don't know whether they go down that pathway, Sean. I'm still, it's a 50-50 bet as far as I'm concerned. So if they do go down there, then that opens up a different can of worms, and if they don't. So I think that pound, it's got the capacity to take a 137.5, 138 handle in the short run. So yeah, I'm keeping an eye on it. That could be a good trade, the old cable.
Let's go to the survey question to see where the room's view is on the impact for outlook of supply-demand balance. Analysts have cut forecasts for the first quarter oil demand by as much as 400,000 barrels a day on China's COVID travel restrictions. Should OPEC adjust plans for Q2 supply to accommodate lower demand forecasts? That's the question in essence. What will OPEC do next? Inevitably, it is a bit early to call on that, Amena, but it is the question that comes into play. We've been talking about it in recent weeks. When does this 6 million barrel a day demand recovery for 2021 actually start materializing? And when can OPEC sort of move up the supply chain into that? And if they don't, do they not risk allowing shale and others to come back in ahead of them? So what do you think the dynamic plays on that for OPEC moving forward? And of course, as you suggested, bringing back some of the members who currently are under restrictions like Iran and Venezuela.
Sure. In terms of Saudi Arabia's policy, I think, just looking at fundamentals and looking at where demand is going, etc., I think they were going to err on the side of caution. If they see a little bit of demand growth, they're not going to say, okay, let's return full volumes back into the market. They're going to err on the side of caution, or even take preventative actions that volatility is something that really concerns them, Sean. So to take actions that prevent or limit volatility. So that's in terms of Saudi Arabia. But you have other members too that are eager to start increasing their output. We saw exceptions even being made at the last OPEC meeting, where Russia and Kazakhstan were allowed to increase. So I can tell you, just based on that, two things. One, Saudi Arabia would like to take the cautious approach and perhaps not put any more barrels into the market collectively. But at the same time, if you have members that are asking to start increasing, you're going to get some kind of a compromise deal like we've seen before. This kind of, mix between the two keeps the group together and keeps the general pact intact to prevent prices from slipping back.
That idea of price stability, $55 a barrel, give or take a dollar here or there, you would think on the whole, they must be quite pleased with that number. Of course, everybody would like a little higher, but ultimately stability rather than the volatility would probably be preferred.
Absolutely. And nobody really wants to rock the boat now. Last year we saw many countries asking for exemptions, asking for alterations to the terms of the deal. Now we're seeing these countries being completely quiet. Countries such as Nigeria, for example, because they really need oil prices to stay in this range and, of course, increase from here.
Mike, looking ahead to the coming days of this week and into next week, one of the sort of big things on the horizon, I'm not sure how big it is, but it feels like it could be, is Trump coming back onto the stage with the impeachment trial in the US Senate next Monday. Is that a big deal? Is that something the markets could be disrupted by? Anything else to be watching in the coming days?
That Joe, he's doing what he needs to do. He's a megalomaniac. He needs the attention, and it doesn't really matter. I think most people just want him to go away. Let's move on. So I don't think that's really going to matter. To me, the bottom line for energy and crude oil is the massive dependency, like Amena mentioned and Peter mentioned. We'd have to depend on more demand. We have to depend on OPEC cuts. So we have to depend on the stock market going up. So to me, the thing is, we're overdue for a little bit of volatility in the stock market. I mean, here's a good example. Gold volatility, forward-looking volatility is 20%, and it's had a 15% correction. So I'm bullish gold because of that, and I've been bullish fundamentally. It's had its correction. The stock market volatility forward-looking is much higher. It's 30%, and it hasn't had that 15% correction. So that's what to me, that's the key thing that's going to matter, is when the U.S. and the global stock market has a little bit of normalization, then everything will reset. As far as data and things, you need OPEC discipline, and how long is that going to last? We know they need money.
Well, you'd have to say that they've certainly shown a lot of discipline, and maybe more than one would have anticipated in previous cycles when they've attempted to coordinate. I mean, nothing has ever happened like this before, but previous cut agreements always had greater slippage than I think we're seeing now. So I wouldn't bet too much against their ability to maintain discipline, given it's a sort of existential survival when you need $55 a barrel to pay your bills. Peter, your thoughts and outlook for the rest of the week? Of course, as we've talked, China is looking on it. It's going on its holidays. That's one big issue in Asia. Anything else there?
I want to see if that groundswell continues, what we experienced today as far as equities. Do we see that roll across for the rest of the week, Sean? Or is there a little bit of a profit taking by Thursday? I take on board Mike's thoughts as far as gold. Yeah, I'm certainly a bull there. So I think there's a good kick along that, 1900 handle sometime in February is achievable. What's happening as far as that US dollar index? So they're the ones that I just want to keep an eye on. Eurozone, and of course, the UK as far as the central bank.
Would the expectation be, Peter, that if the US does go through with this extra stimulus package, whether it's $1 trillion, $2 trillion, I mean, just crazy big numbers, that the dollar weakness trend then continues, returns?
It might. It may well, be an 89.8, 89.7 handle. You might see a quick, washout. It's probably going to be very good as far as equities. They'll get another little bit of a leg up. But I wouldn't be surprised that you see a little bit of softness in that US dollar, Sean. I still don't know if we're going to be under an 89 handle anytime soon. I think that really is the bottom level of the range. But hey, been wrong plenty of times.
It would seem to me that something would need to give, right? Because we can't have continued strength on the dollar and increasing oil price at the same time. The burden on consuming countries would then become too great to sustain that paradigm. Your thoughts on that, Peter?
Oh, exactly right, Sean, and that's the issue. Look, if there's a wild card and it gets presented to the market, I'm not sure what that is, but if there is always something happens out of left field, and we've all been around for long enough to know that it happens. So let's just see if something happens in February that really takes us all by surprise. I don't know what it is, but if it does, then that could be the catalyst
going up. Interest rates going up.
Come on, Sean. Come on. We're going down to negative, brother.
Hey, man.
We're all heading negative.
I wouldn't have thought I'd see things happen that we've seen happen in the last few months. Who knows? But that's obviously ridiculous. That's not happening. Before giving Amena the last word, let's get the survey result here today and see what the market. Should OPEC adjust plans for Q2 supply to accommodate lower demand forecasts? That's a yes by most of the people in this room. Amena, your thoughts? It sort of fits with the sentiment you're saying that Saudi will be watching demand recovery very closely.
Yeah, I agree. I mean, this is what everyone expects from the OPEC group to do, is to adjust to any changes in fundamentals. But again, the biggest wild card for me, Sean, is if we see the easing of US sanctions for Iranian oil, and you get those Iranian barrels back into the market. Who will make space for them? What will happen to OPEC policy? That's something we're watching very closely, especially as the Iranians every day in their state news, we were seeing statements by officials saying that they're ready to ramp up production. So that adds also a political element to the decisions being made, which is a wild card.
Do you think they're giving any sort of appropriate signals to the U.S. administration that they're ready to talk, they're ready to compromise? Is that dance from afar already started, do you think?
Yeah, we've seen. I mean, the foreign minister, the Iranian foreign minister, I think there was a tweet a couple of days ago where he said that they are waiting for the U.S. to approach them. They're waiting for them to touch base and start talks. So, yeah, it's already happening.
Yeah, it'll be interesting to see how quickly that could happen. Of course, the Biden administration is somewhat caught up with domestic affairs for a few months at least. Well, that's a wrap for today. Listen, thank you so much, Amena, for joining us today. Peter and Mike, as always, in from New York. Peter from Sydney. Around the world in half an hour is always a bit of fun. Really appreciate your insights, and thank you, everybody, for logging in. Our halftime talk feature interview this week with the CEO of Dragon Oil, who fought for their survival last year as oil prices collapsed, and has a pretty interesting story of maintaining and increasing production in Turkmenistan and developments in Egypt. So an interview worth listening to when you have half an hour. That'll be published tomorrow. Thanks, everybody. Have a good day. All the best.
Thank you.
Thank you.